Continuing our review, questions 6, 7, and 8 also pertain to stockholders' equity. And question 6 says, what type of account is stock dividend distributable? And we've talked about that it is a shareholders' equity account that is used between the date of declaration and the date of distribution to recognize that either a large or a small stock dividend is in the works and has been voted on by the Board of Directors. Question 7 says, what type of account is cash dividends payable? It is a current liability account, and it comes into being when you have declared a cash dividend on the date of declaration. And remember, on the date of declaration, you debit cash dividends or dividends, and you credit dividends payable or cash dividends payable. And that is for the amount of shares outstanding times the cash dividend per share. On the date of record, there is no entry, and then on the date of payment or distribution, it's debit cash dividends payable and credit cash. So you'll notice in this case, the only time that you're impacting shareholders' equity is for that cash dividend account. Otherwise, cash dividends payable is a current liability, and cash is, of course, a current asset. In question 8, we have a stock split, and it's a 4-for-1 stock split, and you'll remember there's no entry when we have a split. Instead, there's a memo, and that memo explains the makeup of the shareholders' equity account, common stock, before and after the split. Because remember, the balance in the stock account does not change. So we're going to look at the difference, or how it is impacted by the par value, the market value, and the number of shares outstanding. And you'll recall that shares that are held in the Treasury are not impacted by a stock split. So only the outstanding shares are split. So in this particular case, it says that the par value is $100 before, that the market value was $160 before, and the number of shares held by external parties is 100,000 shares. And if we have a 4-for-1 split, that means the par is divided by 4, and so now the par will be $25. The market value is also divided by 4, so the market, or the stock, is now selling on the stock exchange at $40 a share. And the number of shares outstanding quadruples, or we multiply by 4 to 400,000 shares. And the reason that the account balance does not change is that if I take a par of $100 and we multiply by the shares outstanding of 100,000, that is equivalent to taking a par value of $25 a share after the stock split times 400,000 shares. So since they're equivalent, there is no entry, there's just a memo to explain why the par has been quartered and why the number of shares outstanding has quadrupled.